Today, I'm with Lisa Kimball, Senior Vice President of Open Banking for MasterCard. It's a pleasure to have you here with us, Lisa, and I'm looking forward to our conversation today.
Thanks. I'm looking forward to it as well. Happy to be here.
So today we are going to talk about open banking, and in particular, how the American adults are actually using more and more digital channels to open bank accounts, to manage their bank accounts, take loans, etc., using digital channels. But still, we also see that some proportion of the population, they still have concerns about cybersecurity, about how sharing data, what will happen with the data that they share. And we have you here just to know more about that. We recently conducted a research together to actually have more accurate data about what's going on right now in consumers' behavior when it comes to using digital channels for that. So we know that more and more consumers are using digital channels. They feel comfortable opening accounts, managing these accounts, sharing financial information. We know that more than 3/4 of those who open up a financial account last year, they use digital channels. But there's still some population, they don't feel so comfortable sharing their financial data. So Lisa, tell me, what are the key drivers in this shift in consumer behavior?
Yeah, I think that's such an interesting question. If we think about the past couple of years, and maybe going back even further than that, we've really seen an acceleration in a consumer mindset that's right here, right now. And that includes everything from grocery shopping to media. So we think about technology that's allowed us to skip the grocery store in favor of an online order that's on my porch in a while, and to stream TV, movies, podcasts at my own convenience rather than at any specific day or time. And increasingly, I think that expectation is that managing our money should also be available at our convenience. So I don't want it to require a trip to a branch, or I don't want to be limited to business hours for a call center in order to transact and manage my money. And I think that was really confirmed in the recent research, showing that, as you mentioned, more than 3/4 of consumers are using a digital method to use and increasingly to even open their financial accounts.
So obviously, we all want more convenience. It's great. It's great to have just your phone and start, paying your bills, opening accounts, managing everything from your handset. But what about how these digital channels can deal with fraud issues, for example, compared to traditional channels? Why is it better or worse? What's your opinion on that?
Yeah, I actually think that although it may sound a little frightening at first pass, let me just use an example to illustrate how digital channels can reduce fraud and create a much safer and more convenient experience. So many of us, maybe I'm dating myself at this point, but have been asked to provide a canceled check in order to demonstrate account and routing information to set up an ACH payment from an account. Keep in mind that checks can be fraudulently printed. Also, now we've got a piece of paper that's handled by multiple people. Back in the way back, we even would let it, sit on a fax machine somewhere. Who knows who could see it and have access to that information. And financial institutions have had to institute a set of manual validations, phone calls, and other time-consuming paths in order to ensure that there isn't fraud in that process. And then if in the instance when fraud is allowed to come through, it's very difficult to trace back to who or when it originated, because so many different people could have had access to those documents and the information. If you think about a digital example, I can actually go in, permission the ability for a secure data connection directly from my financial institution. That comes through a trusted data steward like MasterCard and Finicity, and goes straight to the bank or vendor that I'm permissioning. So that includes digital verification of identity, confirmation of authorization, and that all happens real time. In the same instance, I receive notification and confirmation digitally. And really the end user transparency about what information was requested happens while it's in process and provides a quick backstop and better traceability of anything that looks suspicious. I can actually stop it while it's happening rather than noticing later and then we're trying to backtrack and find out what happened. So if I circle all of that back to convenience as well, it could be even easier if I had initially permission data to support a credit decision to open the loan, for example, and then I just easily indicate yes to leverage that same account to make payments on the loan. So it's a really sweet spot of allowing better convenience, better visibility for people who are permissioning their account access, and then also strong fraud and safety controls.
So basically, what you are telling me, which seems obvious as well, is that all these digital channels, if they're obviously done properly and with all the security measures in place, basically the consumers shouldn't have these concerns that they have sometimes about sharing the data, stolen data, etc., because these digital channels offer an added layer of security somehow, or more than one layer.
Yeah, absolutely. I think you hit on a great point, which is that, it's important to ensure that you're working with trusted brands and strong companies who are providing that layer of security. But to your point, when it's done correctly, it can be even safer and then is more convenient.
So, and this is not going to be surprising. I'm going to just bring one of the data that we got in this research about demographics, because we know that although many American adults have used digital channels to open accounts, but there is one particular set of people that they are most likely to use digital channels for opening accounts, credit cards, loans, etc. It's not a big surprise to say that these are the millennials. Millennials, I guess they are right in the right age in terms of age and financial situation, probably to use all these channels, and they are using significantly a lot the digital channels. So, leaving aside my millennials, what can you tell us about the demographics when it comes to digital channels?
Yeah, I think it's interesting. I was laughing when you said millennials and even Gen Z. Like my son the other day had a request to send some paper over for a financial transaction, and he called me and was like, "What? Why is this happening? This is so crazy. What are they asking for?" So I think obviously that younger consumer set really it really resonates for them, and they're just not used to transacting in person and with paper and having that be the requirement. So obviously they're opting digital tools at a higher rate, but in the research we see seniors and baby boomers also increasingly likely to open accounts online and via a mobile device. So this idea that, generations past older than millennials aren't willing to engage digitally is really not borne out in the research. I thought just wanted to add one really interesting data point was that nearly 60% of US adults, so that's more than 150 million people, opened a new financial account in the past year. And thinking that the rise of digital wallets and specialized fintechs look to be expanding consumer willingness to diversify their financial relationships beyond their primary or core banking relationship. And that's true across all age groups. So really the opportunity to streamline and of course, a safe experience for account opening is increasing in terms of what consumers need.
Yeah, I know this is not, I can't extrapolate this example to all the data set, but I just want to tell you that I don't remember last time I entered into a branch office. Right. I've been using online banking for a really long time. And it's also this experience that once you have some kind of app or digital channel to manage your finance, you start to have more and more. And honestly, I don't remember last time I entered in a bank branch office. So definitely, yeah. I feel identified with the study.
Yeah. Well, and along those lines, if you were about to enter a relationship with a new financial institution and they said the only way to open your account is to come into the branch, right? You're probably not.
Yeah, and especially in these times, and obviously the pandemic changed our patterns. But leaving aside the pandemic, definitely was this shift that we stopped going to the branch. But yeah, so we talk about all these 63%, 64% of people who open accounts digitally. There is this shift towards more digitalization of the finance, but still we have like 1/3 of consumers who have concerns about the data as we mentioned before, they don't feel secure sharing this financial information using digital channels, and in particular mobile phones. What can be done to improve consumer trust?
Yeah, I think this is an interesting question, right? One that we think about a lot at Finicity. And I think really about two distinct elements here related to consumer trust. One is the actual trust and confidence, and the other is the underlying foundational security. So think about a difference between perception and reality, and both are very important. So if we start with the foundational security, industry adoption of direct secure connections for data transfer is continuing to move forward. And I think that remains really important. I mentioned, making sure that the organizations throughout the transaction can be trusted data stewards and are reliable, credible organizations is also critical. And then there are really some exciting things going on with respect to digital identity verification and authentication that include things like biometric validation, device or location fingerprinting, both of which are simpler for users and again, can be more secure. So foundational security, obviously very important. And then having the trust and confidence of those end users is also really paramount. So users should have that visibility to who the data stewards are along the path. They should be able to easily see what purpose their data is being used for, when it was permissioned. I believe they should be able to remove that permission easily and at their discretion. And tools that really support this concept of consumer control are rapidly improving. And along with it comes better consumer understanding of how that data is secured. So in the US, it's interesting. This is pushed, on the one side by regulatory requirement, but also industry leadership. And I think we'll continue to see those two elements come together to better support consumer control and visibility to what's happening with their data.
And it's interesting, one thing that you mentioned, well, you mentioned many interesting things. But one that you mentioned now was biometrics and how you can use different ways to identify yourself. And this is interesting because in the research, we identified that the group of consumers or the American population, half of the consumers feel like much more likely to open a new account if they were able to log into existing accounts rather than sharing credentials all the time. There's this tendency that once they give the data, they are happy to make sure that the institutions share the data via a secure channel and maybe using some verification methods, as you mentioned, biometrics, rather than constantly sharing data, sharing credentials to one another, because they don't know what's going to happen with that data. So that's interesting. Do you think that, for example, biometrics will help, especially for the younger population who feel probably more comfortable just using the fingerprints and other things to unlock services? They will feel more and more comfortable when this data is maybe shared one time with one financial institution, and then this consent is given in a much easier, smooth way?
Yeah, absolutely. I mean, I think I also, if you think about typing in your login every time, right? I'm transacting all over town, right? I'm standing in line somewhere, I'm in the office, right? And I'm having to look the password up, let's be honest, and then type it in, versus being able to use fingerprint, Face ID, and then increasingly on our mobile devices, there is deep integration and tokenized access, so that apps can share that authentication validation based on what the user has already set up in their mobile device. And also, I think really key to this is the transparency. So I need to be able to see, oh, this, I can get a notification back. Oh, something new was just permissioned. Did you permission this? Right? That kind of real-time feedback, I think, can also be really powerful. But leveraging the interoperability of some of the technology across applications right now is really interesting, and I think again, creates a significant amount of convenience, but also really good traceability and transparency for users.
I was about to ask you something, but you kind of answered, but still I want to ask you,
Sure.
because you just mentioned about the industry in general, but how the industry or MasterCard in particular can do to protect this data and still make the, let's say, the transfer of data and the digitalization and the use of digital channels easier for consumers. How you can put both in the balance and not lose anywhere. The data need to be protected, and still you need to offer better and better consumer experience. How do you do that?
It's really one of the core things that we think about all day, honestly. How to find that line between making something really easy and convenient, but also keeping enough consumer education available, but maybe even more so to keep the information about what is happening in a clear and consistent way in front of the consumer. So, essentially, if I pop a second screen with a 20-page term and condition, and buried in there is some information about what may or may not happen, most of us will never know. So how do we make it so that it's not arduous for someone to be able to get the information, but that it's super clear, right? Maybe there's a couple of bullet points that are just the really relevant things. You're about to share your account information, and you're about to share your name and address, right? Like, okay, what's the period of time that's going to be shared? And, so I think we do spend a fair amount of our time on user research and thinking about and considering different technologies that we can plug in that can help us to do more to like pre-populate and identify, and then just have users verify and validate.
So, Lisa, let me ask you one last question. Also, your opinion. Where do you think we are going in terms of open banking and consumer usage? Because I'm not going back to the bank branch office. Obviously, once you start using it and you feel confident, there's no way to go back. It's only way forward. What do you think is going to happen?
I think that I think we'll continue to see this real push toward the consumer or the end user being in control and being like what we've called at the hub. So that means that I should be able to know exactly what's happening with my data set, and who has access to it. And again, like to either extend, but very importantly, to revoke access at my discretion. So I think, this question we were just talking about, how do you, in a streamlined way, get enough of that information in front of an end user, really, really critical. And I think we will, continue to see both regulatory and industry movement there, largely because as consumers, as I mentioned at the outset, like we've got these digital experiences everywhere in our lives. And so, after having like done my grocery order, I'm, like you, not willing to stop in at the branch and sign some papers to do a transaction, right? We kind of have that new expectation. So I think that'll continue to be really the heart of what we see moving forward. And I think it will continue to expand. So what other types of financial data? So we've talked about open banking. There's another term that's starting to catch hold, open finance, where like, what is the other set of data that I can permission access to for use cases that benefit me? That can include income information. There's a lot going on with respect to the real estate and mortgage market in terms of some of those use cases. So how do we expand the data set that's there? And then I think there's still a lot of work to be done around standardization of the data exchange. So the direct API connectivity and kind of industry standardization around how that connectivity should work, which is what really allows us to be transparent for users and allows them to be in control of access.
So next time we'll be talking not about open banking, but as you said, open finance.
Open finance.
It will be in the past already. Yeah, Lisa, it has been a pleasure always talking to you, and that was very, very interesting. And I'm looking forward to speaking to you soon again.
Likewise. Thanks so much, Ader. It's been fun.